If you ever wondered what ICOs, IEOs, STOs, and IDOs are, you're in the right place. By the end of this video, you'll understand the differences between these fundraising methods and their pros and cons.
Let's begin with ICOs, or initial coin offerings. Meet Alice. Alice is an entrepreneur with a groundbreaking idea for a decentralized platform. To raise funds, she decides to launch an ICO. In an ICO, Alice creates a new cryptocurrency token and sells it to early investors in exchange for established cryptocurrencies like Bitcoin or Ethereum, or even fiat money. Investors buy these tokens with the hope that their value will increase as the platform grows. ICOs were extremely popular in 2017 and 2018, but they came with significant risks. Many projects turned out to be scams or failed to deliver on their promises. Due to the lack of regulation, investors could easily lose their money. However, ICOs provided a way for startups to raise significant funds quickly. Next, let's talk about IEOs, or initial exchange offerings. Meet Bob. Bob also has a great idea for a decentralized application, but he's concerned about the risks associated with ICOs. Instead, Bob decides to launch an IEO. In an IEO, a cryptocurrency exchange acts as an intermediary, conducting the token sale on behalf of the project. Investors buy the tokens directly from the exchange. The exchange performs due diligence on the project, adding a layer of trust and security for investors. For Bob, this means he can leverage the exchange's reputation and user base to reach a wider audience. IEOs have gained popularity because they offer more security and transparency compared to ICOs. However, the involvement of exchanges means higher fees for the project team. Now, let's move on to STOs, or security token offerings. Meet Carol. Carol has a real estate project and wants to tokenize ownership to raise funds. She decides to launch an STO. In an STO, the tokens represent real-world assets, like equity in a company, real estate, or revenue streams. These tokens are considered securities and are subject to regulatory oversight. For investors, STOs offer more protection and legal rights compared to ICOs and IEOs. The tokens are backed by tangible assets, reducing the risk of fraud. For Carol, this means she must comply with regulations, which can be time-consuming and costly. However, the added security and legitimacy attract institutional investors who may have been hesitant to participate in ICOs or IEOs. Finally, let's discuss IDOs, or initial DEX offerings. Meet Dave. Dave is developing a new decentralized finance, DeFi, protocol and wants to raise funds through an IDO. In an IDO, the token sale takes place on a decentralized exchange, DEX, rather than a centralized one. Investors can participate in the token sale directly through the DEX, without the need for an intermediary. This provides greater accessibility and transparency. For Dave, this means he can reach a global audience and benefit from the liquidity provided by the DEX. However, the lack of regulation and due diligence means investors must be cautious and conduct their own research. So, what are the key differences between these fundraising methods? Let's break it down. ICOs are mostly unregulated token sales where projects sell tokens directly to investors. They offer high potential returns but come with significant risks due to the lack of oversight. IEOs are token sales conducted on cryptocurrency exchanges. The exchange performs due diligence, adding a layer of trust and security for investors. However, this comes with higher fees for the project team. STOs involve tokenizing real-world assets and are usually subject to regulatory oversight. They offer more protection and legal rights for investors but require compliance with regulations, which can be costly and time-consuming. IDOs take place on decentralized exchanges, providing greater accessibility and transparency. However, The lack of regulation means investors must be cautious and conduct their own research. From a fundraiser perspective, which fundraising method is best then? It depends on the project and their goals. If they're looking for a quick way to raise funds and don't mind the risks, an ICO might be suitable. If they want to leverage the reputation and user base of an exchange, consider an IEO. If they're dealing with real-world assets and want to attract institutional investors, an STO is the way to go. And if they're developing a DeFi project and want to reach a global audience, an IDO could be the best fit. Leave a comment below with your thoughts on ICOs, IEOs, STOs, and IDOs. See you around in asset tech. Thanks for watching.